Welcome back to Mike on Money, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thank you for joining us again for part 4 of our series around cryptocurrency. And today we're going to talk about where and how to invest into it and the different volatilities and strategies you might want to apply to each one of those. So if you haven't been following, we've done part 1. We talked about blockchain and how that works. So you better understand how your money's invested and where it might be invested. 2, we did talk about Bitcoin specifically, and obviously some of the characteristics and the reasons to invest into that, and that it's a value-based type of currency investment, very much like gold. Part 3, we talked about Ethereum and stable coins and how they differ from Bitcoin. Ethereum being a rules-based cryptocurrency, and stablecoin being pegged to a fiat currency like the US and Canadian dollars. And today we're going to talk about, as I mentioned, how you can invest into it and what that means. Before we jump into it, of course, as always, these videos are for information purposes only. Always do your own due diligence or speak to a professional advisor about how it can fit into your portfolio, your risk profile, whether it's right for you. And if you have any questions around that, go to mikeonmoney.com. You can reach out to us through any of our portals, email, phone call. Happy to take a look at what you're doing, what makes sense for you, and how these may or may not fit into your investment strategies going forward. So with that, let's put all that aside. Let's talk about ways to invest into different cryptocurrencies. Now, I've mentioned a few through the video series. Obviously, if you've been out there, you've been interested, there are online applications, different exchanges that you can purchase crypto on. Probably the most popular one or largest famous one is Coinbase. They just did an IPO earlier this year, where you can go buy the different cryptocurrencies, in your account, transfer money in and hold it there. I also mentioned different applications like PayPal have now expanded that you can buy cryptocurrencies like Bitcoin in your actual PayPal account and do sell and buy different cryptocurrencies there. And then there's of course the exchanges. You can buy ETF, or exchange traded funds, that specifically hold the different cryptocurrencies, Bitcoin being the most popular on there. But you can have the others, and some of them even hold a diversity of different cryptocurrencies within the fund itself. Those are some of the easiest to transact. They just transact on the stock exchange like you'd be buying a stock. And there's closed-end funds, which are very similar to the ETFs that you can buy as well, with the same types of characteristics. And I'll talk a little bit more about those in a moment. And then there's some people who invest into companies. So there are some companies out there, that I mentioned earlier, that invest their retained earnings. So they have big holdings in cryptocurrencies, things like Grayscale. Tesla, I mentioned, very popular in the press, of course, with all the tweets that, they invested 1.5 billion. There's several others that you can look at too. You can invest into, some of the banks, the crypto banks that actually hold the cryptocurrencies for people that trade on the stock exchange. So you can buy their shares of those companies, and depending on, how many transactions are happening and more people that are holding them, just like traditional bank stocks, they would go up. So it's another way to invest into cryptocurrencies. Now, they all have very different characteristics as to what they provide to you. And I'm going to stick with kind of the 2 most popular, which is kind of the exchange, kind of the app-based buying, and then the market-based buying, like the ETFs. So the benefit of the ETFs, when they came out, as I mentioned in previous video, they're newer, especially in Canada. In Canada, they've been around a little bit longer than the United States. In fact, there's several now in Canada, and they're just starting to gain a little bit of traction in the US. But in Canada, there's Evolve ETFs have one, Purpose have one, 3IQ, CI mutual funds, or CI ETFs specifically, have one. So, there's a lot of different options there if you want to buy into them. And one thing you got to really remember, so the benefit of that is you can hold them in your investment account, and you can hold them in our RRSPs, and you can hold them in ETFs, which is a big benefit in the sense you can tax shelter them inside the RSP if you want to, or the TFSA. On your apps, when you buy them on your apps or the exchanges, it's more like a trading account. It's outside those. You can't put them into the RSPs. You do get immediate transactions though, 24/7, right? Because Bitcoin, unlike stocks, don't have market hours. It's 24 hours a day, it's 7 days a week, and it is very global. Different things around the world are affecting the price of those currencies every single moment of every single day. I mentioned before, Bitcoin itself has seen just this year a plus 42% day and a minus 42% day. And one of those big swings, I think it was like 30 some odd percent, happened at 12:42 a.m., like right in the middle of the night. So if you missed that, it was only for about an hour that swing happened. You maybe missed that opportunity to either buy in or sell out at, those prices, depending on what side of the market you were on at that time. So keep that in mind, because when you buy into an ETF, you're locked to market hours. So something could have happened overnight, and all of a sudden your ETF opens the next morning down 40% or up 40%, depending on what happens somewhere else in the world, or sometime off market. I have clients calling me all the time saying, or more recently with the volatility in the cryptocurrency prices, saying, should I buy some on this dip? And even if we wanted to, the markets are closed, right? It'll be after, in Vancouver time, that's 1 p.m. So it's after market. I said, well, I can't buy till next morning. And a lot can happen between 1 p.m. and 6:30 the next morning that I can go out and buy that for them. And conversely, you could be sitting around and seeing the prices up, and you want to get out at 3 p.m. in the afternoon, or 4 p.m. if you're in Eastern time, and say, oh, but the market's closed, I have to wait till tomorrow morning, and that opportunity could be gone completely. And out of the different types of currencies, if you watch part 1, part 2, and part 3, they react very differently, Bitcoin being probably the more volatile of the main currencies. By the time you get there the next morning, that opportunity could be completely gone. Or, you could be up and then all of a sudden you open way down in your value. So you have to be really careful where you buy it, depending on which currency you're buying and why you're buying that currency. Is it a long-term? As we talked about Ethereum, it's more about growth over a longer period of time, about more adaptation of that rule-based currency movement. And then, Bitcoin, of course, value-based, although with the supply and demand on that, as we talked about, it's a limited supply out there. That's where you see those really, really big swings. So when you think about the risks that you're buying, so there's a different type of currency, but there's the vehicle that you're using to buy it into. I'm not saying ETFs carry less risk or more risk, but certainly your opportunity to access them is limited, and that could compound your risk depending on what strategy you're applying. And then, of course, holding them on your own. Of course, the onus is now on you to do that trading, because you're not going to have an advisor or someone, another set of eyes or more sets of eyes helping you keep track of that price movement. But even if you do track it, you have to be awake, of course, or tracking it at that moment. When we're seeing 30+% move within an hour, you could easily miss an opportunity on either side. So that's, when you think about investing into cryptocurrency or Bitcoin or any of these are factors you really have to consider, because they can completely reshape your experience in having an investment in there. So that's what I want to warn you about. I wanted to explain, the different ways you can get into it. Do consider all those factors before you make an investment into cryptocurrency, because it can change the outcome dramatically. And if you have any questions about, should it be in your portfolio, how you want to have it in your portfolio, what type you want to have in your portfolio, happy to have those discussions. Go to mikeonmoney.com, reach out to me, give me a call. Let's have a conversation. But with that, that's the end of our parts on cryptocurrencies as it is up to date as of May 31st. Tomorrow, June 2nd, we're going to be talking about ETFs specifically, their structure, when to use them, and why you should use them. Some people love them, some people hate them, but I think it's important to really understand where they're best used, when they can most benefit your portfolio, and what are the underlying characteristics, again, when it's going to help you and when it might hurt you. So with that, enjoy. We'll talk again soon. Thank you very much.